Thank you for coming back to the channel. This is Sean Rampersad here with the Mortgage Group, and today I'm going to be talking to you about rental properties again. In the last video, I talked about rental properties and if it's a good investment. Today, I'm going to be talking to you about if rental properties are actually a passive income investment. Let's get into it. So rental properties I've owned for many, many years, and a lot of people say rental properties are passive income, where I don't actually believe that that's true. There's a lot of things that you have to do with rental properties that make it active income. It is in a form passive, as in if you have a good tenant and they've been there for years and the property's in great condition, it can be a form of passive income where you don't have to do much to earn the income. But if the property's falling apart, you don't take care of it, and you have bad tenants, then there's some active work that you're going to have to do to the property. So here's some reasons why rental properties are not truly passive. First one is managing tenants. So you're going to have to screen those tenants to find out if they're going to be good or not. You're going to have to manage any repairs that the tenant comes up with. So I had a tenant call me this week. A dryer is not drying the clothes property. I ended up having to call an appliance company to come in, check the dryer out, replace some infrared something in the dryer. I don't know about all that stuff, but I had to do some active work to get it done. It wasn't a lot of work. I mean, I called the appliance company. They went out, they did the repair, I paid them, and that was done. And I used money in the savings account that the overflow money of the property went into. You're also going to have to deal with things like vacancies. So vacancies can be costly, of course. There may be an advertising expense that you need to go and find a new tenant. And you might not have rent for a month, maybe two, who knows, depending on the market you're in. Most markets that you're going to want to buy rental property in have a very good rental market. So that means there's tons of renters out there looking for the property. Do not buy a rental property in areas where the rental market sucks. It just doesn't make sense. You need a return on investment. You need some cash flow in the property, or else the rental property will suck your life. You're also going to have to handle things like lease agreements. So it's not just like repairs. It's not just screening the tenant. It's lease agreements. It's paying taxes. It's managing the bank accounts to make sure that the cash flow overflow is going into these accounts. It is possibly paying utilities if the tenants are not paying utilities, and managing that part of the equation. Next is property maintenance. So you're going to want to do some regular maintenance to the property. Always remember that the property is yours. That's one thing that I find people forget about. So they'll rent the property out and then they'll forget about it and they'll leave everything up to the tenant. Well, that's a good way of your property going to shit. Basically, what ends up happening is they will not take care of your furnace, most likely in 99.9% of cases. So you as an active landlord are going to want to get your furnace cleaned. You're going to want to change the filters in the furnace so that furnace lasts you a longer period of time. And that's not the end of where the maintenance comes in. You're going to want to get the gutters taken care of so you don't get leaks in the properties. You're going to want to take care of shingles, make sure all the shingles, nothing's been blown off or anything like that, to make sure that everything in the property is the way it's supposed to be, because the tenant will never take care of your property the way you would take care of the property. There's also going to be unexpected issues that come up. I guarantee it. So in every rental I've ever had, at some point I've had some plumbing issues. So one of the rentals, for example, that I own is a fourplex, and there was some plumbing issues because what the tenants were doing is they're pouring oil down the sink. Now I had to put some signs up that said, "Don't pour oil down the sink," but they did it. They clogged the pipes. I had to get a plumber out. They had to, do the whole thing. It ended up costing a couple $1,000 for that repair alone. So that type of thing can eat up your capital. Next, you're going to have to manage things. You're going to have to manage all the expenses and the finances. So you're going to have to pay property taxes. You're going to have to manage the mortgage payments on the property, potentially the utilities on the property. You're going to have to manage parking, real estate accounting. all of these different things are going to be a part of the management. Now, it's not overbearing by any means. I mean, I'm running my business. I've also got the YouTube channel. I'm investing. I'm doing all these different things, and I can still have time to manage my rental properties. So it sounds more than what it is. I guess the key point is you're going to want to get good tenants in there that are going to take care of your property. And then you are going to want to create some sort of list of regular annual maintenance you do to the property. You get oil changes on your car, okay? They put a sticker on your car window that says get an oil change here. You need to put reminders for yourself in your phone or in your calendar, however you manage your time, and say, this is the time where I need to get the furnace clean. This is the time where I need to have the property, fully checked out once a year. This is the time I'm going to go and do a walkthrough to make sure the tenants aren't beating the shit out of my property. And of course, there's going to be some legal compliance. So when I say legal compliance, I don't want to make this more complicated than it is. If you have to evict somebody, you're going to have to abide by your local landlord and tenancy act. So you're going to want to get the right documentation. You're going to want to get the right evidence. You're going to want to get the right everything to take care of the property. You also need to stay up to date with safety codes. So for example, in my fourplex property, I have to make sure that there's egress windows in the basement. Those are the windows that stay open. Doors that automatically close that are solid, that's fire protectant doors on the furnace areas and on the entrances to the units themselves. So how can you make a rental property more passive? Because that's the goal. I mean, that's what you want. You want your rental property to be as passive as possible. How can you do that? Well, the first thing that I would say that you can do is to hire a property management company. So you'll be taking on a new expense if you hire a property management company, and the expense will cost you anywhere between 8 to 15% of the overall rent. That being said, if you have a property management company, they will find the tenants for you. They will evict the tenants. They will ensure that all repairs are done. I mean, they're taking care of everything that's involved with the building. So if you want to make it more passive, you can spend the money on a property management company. There's something called a turnkey property. There's two ways I'll explain this. One, there's turnkey properties where property management companies are already involved in the property. So that could be like an apartment complex that has a property management company already. That would be considered a turnkey property. There's also a turnkey property as in a brand new property where it's like they turn over the keys to you, everything's ready to go, and you can rent that property. Those are also great because they'll need less maintenance in the first 10 years of the property. So two types of turnkey properties will make it easier for you. One, with when you buy it, it has an active property management company. And the second turnkey is a brand new property. So for the first 10 years, you're going to require minimal maintenance on the property. And finally, you can invest in real estate investment trusts. That way you don't have to do anything. So a real estate investment trust is a company of holdings. They hold many, many properties under their company, and you can invest in those properties through the real estate investment trust. And they'll guarantee you some level of return on investment. Maybe they won't guarantee it to you. Some trusts, it depends on the trust itself. But if you want to invest in real estate and not own the asset, and be responsible for the phone calls from the tenants and for the maintenance and all the other things, then you can invest in a real estate investment trust. Most of them do have a pretty good return on investment. So overall opinion of rental properties on if you should own a rental property or not, or if rental property is actually passive income. I don't think a rental property is passive income. I don't think it's totally passive income. I am making money in my sleep, but I am responsible for some things. It's not a lot, but it can be overbearing for some people. Watch my other videos about rental properties and you'll know exactly what I'm talking about. If you can't handle stresses like potentially having to evict a tenant, and you know this about yourself, then don't buy a rental property. But if you know that you can deal with these things, it can be a great source of different sources of income. And I have that in another video as well. Thanks a lot for watching. Please like and subscribe to the channel so I can get this video out to other people interested in rental properties. Talk to you soon.